Hello, hi everyone. This is Arun from Investing Gurukul. Today I'll do another video on our commodity series. We will do a commodity sector overview. Last time we did this overview was back in October 2025. As you know, in the last few weeks and months, the gold and silver and other precious metals and commodities have run up a lot. So I do get some questions on, what's next, right? So we'll try to see where the sectors are now and take some assessment. And of course, whatever I talk here is not investment advice. So please do your own research. I'm not an investment advisor. Okay, with that, we will kick off. Now, as you know, as we stand today, gold is at 4,700 US dollars and silver is at 95 US dollars. Back in October, when we did the previous video, it was gold was around 4,000, I think, and then silver was like around $50. So, yeah, there has been a lot of movement since then. A lot of FOMO has also been built. So yeah, we'll look at what's happening and how at least I'm proceeding with my investments in the commodity space. So yeah, so first is factors moving gold. There are many reasons that are contributing to the gold move now. It seems like a confluence of different reasons that's helping gold. So of course, the first and foremost is the geopolitical, which is your when in fear, buy gold, right? So you have wars in Ukraine, problems in Iran, even Venezuela situation, and now we also have the Greenland situation, which could essentially mean that there could be a break in NATO, right? So I don't want to go deep into the political side of things, but you know how things are, right? So, and then the most important one is, of course, the monetary aspect. Now, with all this geopolitical situation, what's happening is there is a self-protectionism, meaning every country wants to look after themselves. And also there is, the major countries like Russia and China and even India and other emerging countries, they are pulling back their, investments or the US bonds that they bought. So there is a move of money, and they are trying to, each one is trying to look after themselves in terms of the supply chain and so on. So which means that from a monetary standpoint, gold is the go-to place. So that's why you can see that all the emerging banks and central banks have been accumulating gold. And this has been happening for the last 2 years, and nothing has really stopped in that sense. And then from an economy standpoint, specific to US, so the US debt is increasing because the yield that they have to give is like huge. So US government has to refinance so many debt, trillions of debt this year specifically. So basically, what this means is there is a confidence erosion in US bonds. In fact, one of the core themes of this 2025 year was that many investment funds and many, the portfolio managers moved from their 60-40 allocation, which is 60% stock, equities, 40% bonds. So that's a traditional mix, 60-40. They have moved now to 60-20-20, which is 60% equities, 20% bonds, and then the another 20% is your precious metals and energy, right? So in that case, basically your money is moving away from US bonds and then it is flowing into the precious metals. So that's been a huge contributing factor as well. Then you have the inflationary pressure. The inflation in US is still sticky, so that's helping to gold as well. And then institutional ETFs and investment flows. So as the gold price increases, what happens? The retail and other funds, they start putting more money into buying gold ETFs and silver ETFs and so on. So I have a slide later on silver ETFs just to show what is really happening in silver space. So essentially, this is the money that mainly comes from the retail side, going into the gold ETF. So every gold ETF, they are supposed to back it with physical, of the physical metal. So that kind of increases the demand. So if your gold production or silver production is not increasing, and if your demand is increasing, of course, then automatically the price is also going to increase, right? And last is the political, which is like the trade wars and tariff wars. So these are all, all these are contributing factors for gold. So what we will now look at is a specific ratio, which is something that I follow to say like where, whether are we still bullish gold or is the bullishness weakening, right? So that is, I call it as a real yield stress, which is essentially it takes in the numerator, it's a ratio. In the numerator, you have the US 10-year yield minus your 2-year yield. It's a spread. It measures that spread and then divided by Dixie, which is nothing but the dollar index, which is your dollar. In the chart in the trading view, this would be a dollar index. So what does it mean? So when this ratio is bullish, meaning that we have seen that the gold is also in correlation. So basically it means that your the Fed, the US Fed is printing and easing, and then the inflation is sticky, but the dollar is losing edge. So it's like when your US dollar Dixie goes down, that means your denominator is going down, that means the ratio is going to go up. The other way is if your spread is increasing, then if the numerator increases, US 10-year minus US 2-year, uh, the spread increases. That means the numerator increases. That also contributes to the ratio. But what if right now what's happening is both are happening at the same time? The numerator is increasing. At the same time, the denominator is also decreasing, which means that there is a parabolic move. So that is exactly what's happening, which is monetary easing is happening, and then the currency debasement of the US dollar is happening. When we talk about monetary easing, so we talk about rate cuts, right? So US is cutting the rates, but then the Fed is also indicating that they will start QE soon, which is quantitative easing. So that means there is going to be a monetary easing policy that is continuing, and in addition, the US dollar is getting debased. When these two happens, your numerator increases and then the denominator decreases, which means the ratio is going up and up and up, and that's kind of contributing to the gold. How do you view this practically? So let's switch over to the charts. So if I go here and in the trading view, I just do US 10Y minus US 02Y and then divided by Dixie. If I do this, then I get this kind of a chart. Now, make sure, I mean, this is a monthly chart, right? So you can see that this chart turned in July month. And so if I look at a weekly chart, so you can see it's even more clearly, which is it changed in March 2023, but then it took some time, and then finally it broke out during September 2023. Since September 2023, this ratio has been going up and up. There is no like stopping this. Now let's compare this to gold. So again, I'm going to a weekly chart here. So you can see that the whole move again started in this October 2023 time frame. So that's when the breakout happened. And now look at the chart here. So you can see that around October month, September month, that is when the breakout happened in the gold. So from here around this time, this is where you should start positioning in this. So it is like from 1980, it's gone now to 4,700. So in this move, right now you can see that it is still on an uptrend. It hasn't broken down this here in this say area here, right? So for me, like I will still hold the gold, as a hold here. I'm not looking to sell. There is no reason to sell because all the reasons are still that was valid 1 year ago is still valid now. So unless this chart starts falling down into red zone again, say that is when I will probably start, cutting down on my gold allocation. Now, next is gold to silver. So last time when we spoke in October, the silver gold to silver ratio was around 82. Now it has fallen down to 49. Now with silver, you can make there are a lot of people making lot many arguments and reasons why silver is moving. I don't look at all of them. Like I just stick to a basic thing, which is if I have a piece of gold, how many silver I can buy. And essentially, if it goes up to a certain range, if it tops, then like for example here, you can see that around 2023, the gold to silver was around 100, which is one piece of gold gives you 100 pieces of silver. So when those kind of ratios goes high, then the market kind of corrects. So people will start buying silver at that time. And now it is the same gold, one piece of gold is worth 49 pieces of silver. So right now, if you see here, it is coming down to a historical range. So it might even go down to 30, but we don't know where is the end point because it's a fast moving train. We don't know where the stop is. But what I can say for sure is that this is now coming to a place where we could start seeing some silver, profits getting taken. So it is very much possible that we could reach 100 and then it could go down like a 50% back to 50. So that can certainly happen. So personally, like on the silver side, I would start booking profits. That's what I'm doing. Now, again, the silver chart, you can see it's crazy. It's crazy parabolic. One thing which is inevitable in charts is mean reversion. So when you pull the rubber band to one side strong, and it goes and goes, and then at one point it snaps, and then it comes back. So it will come back, but it is not all bad news. Basically, even I can show a chart of silver where you will see a 50% fall, but still in a bull market, after that, it kind of goes again. So I'll just show you a quick overview of that, like what I'm talking about. So if you take a standard silver chart and then do like a monthly, let's say go back to, let's see, you see here is the uptrend, right? So from October 23, it was $5 silver. Now it went up, and then it was around $19, which is like a 4x move in in 3 years time. So now what happened? There is a snapback here, which is like what 50%. It comes down 50% in a space of 3 months, but then starts a real up move, which is it goes from $8 back to now to $49 in a span of another 5 years. So my point is silver in a bull market can always give you that phase of 50% correction. So you just need to be careful and of especially of this volatility. So but gold is not like that. Gold is usually gives you a time correction. Silver gives you a price correction. So just be aware of this and make your judgment based on your risk, right? Now, yeah, this is one important thing I want to talk about, which is your silver ETF inflow. So any ETF that gets traded, whether it's in India or in US or any ETFs, they are supposed to, especially if it's a physical silver ETF, if they say that it's a physically backed ETF, so that means that for every silver dollar or whatever amount that goes in, the ETF fund issuer is supposed to buy the physical metal and then store it. So essentially, it is backed by something physical or like yeah. So you cannot like have like a paper and then like say okay, I have silver. So yeah, but it does happen that some of in the previous times the banks have been doing it, but essentially the silver ETFs are supposed to be backed by physicals, right? Now, silver is not a infinite commodity. It is a very finite commodity. It has around like let's say like a certain amount of tons per year production. Now, if you see from the H2 2025, July to December 2025, there are many pension funds and ETFs around the world have started getting inflows into these funds. So even in India, there has been a huge inflow of silver ETF funds. So when these funds comes in, they have to buy the silver, right? So that amount was almost in the last 6 months. It was like inflow amount was itself around 16% of the global production. So your silver is already in a kind of structural deficit because of the industrial, needs. Now you on top of it you add a 16% deficit because of the people wanting to buy silver, right? So, a short story, it's that there are a lot of liquidity coming into the sector. So that is very good news from the sector point of view. But essentially means that there is going to be, prices there. Yeah, so this is a good point in that sense. Now let's look at the copper. So this is an interesting one because this is a monthly chart here. You can see that when currently gold to copper hit a peak of around 850 ratio, and then it starts correcting. So usually in this trend line we will see a correction. So either the gold will correct or the copper will increase. Copper, as you know, is now having a structural demand, in terms of data centers, AI, every, those, there is a big need of copper, and then copper supply is also not great. So I see a real push in the copper demand. So it's possible that copper price increases, but at the same time, it's also possible the gold starts correcting. So, end of the day, I see that in the next 2 years, when around this 2027, when this chart comes down, it might come down to this 500 levels again. So you will, I think there is a real good reason that we will have a good copper run for the foreseeable future, or it could just be possible that copper stays at $6, but gold starts correcting. So either thing could happen, but I'm bullish copper. Oil, this is a different story. Every commodity in this period has gone increase and increase, but the oil has actually fallen down and down. So oil is now is so far down that even a barrel of one piece of silver or 1 ounce of silver can buy a barrel of oil, which was not the case before. So oil is really down with respect to gold and silver. It's a matter of time. There is a mean reversion on that. So I feel like in the next 3 4 years, you are going to see a huge bullish oil market. In India, usually it's not a great news because India is 85% dependent on oil imports, and there are many sectors which doesn't work if there is a huge oil price. So just be aware of this. Maybe start moving away from sectors which have really benefited from lower oil prices. I would say like start looking at oil specific, oil oriented stocks. But this is not going to happen right away. This will take some time. So I do see some more correction in oil and then a real bull market starting here. Personally, I own some US and Canadian oil stocks, so I'm like starting to buy them on that with a view to hold for next 2 to 3 years. So yeah, so this is what I'm doing. Gold for me is a hold. There is no reason to sell. Silver, I'll try to start book some profit here, and maybe I'll buy again on the silver when there is that 50% correction that happens. Yeah, and then copper for me is a long-term buy, and then oil, for me is a buy. None of what I said is an investment advice. Please do your own research. And yeah, we'll do another review of the commodity sector in next, in the Q next quarter. Yeah. Thank you. Thanks. Bye.